Good afternoon, and welcome to MSO's third webinar of 2026, Wildfires, What to Know and What to Do, presented by Seth Burstein of Redzone. I am Sue Quimby, Senior Vice President and National School Director for MSO. Joining me as host is MSO CEO President Jan Seitz. Providing technical support are Cassidy Cody and Mary Beagle. Please take a minute to note the antitrust statement. Good reading if you have insomnia. We will not discuss or answer questions that might address any trade secrets. Next is the disclaimer. Educational and not legal advice in any way. We'd like to thank our generous sponsors listed on the screen and on our website. They help us provide these quality educational programs. Annual sponsorship opportunities are available. Contact us for information. Now about the webinar, getting to the good stuff. Please, wildfires are increasing in number, severity, and duration in the United States and globally. It's not just California anymore. Driven by climate change-induced heat, droughts, and drier conditions. Seth's dynamic presentation will give insurance professionals an edge in understanding why they matter, what the exposure trends and influences are, underwriting and rating essentials, including location and property factors, vulnerability and risk appetite, models, tools, and monitoring, insurance coverages and communications, and a case example and action playbook. So Seth is a former actuary, chief revenue officer at Redzone, an organization uniquely positioned to provide wildfire risk products and services to the insurance industry. He joined in 2023 as vice president of sales. Prior to Redzone, he was very busy co-founding multiple companies and working on actuarial teams at a number of insurers. He holds a BA in economics and mathematics from Yale and an MBA from Babson College. Take it away, Seth.
Thank you so much, Sue. Thank you, Jan and MSO for hosting this today. Happy to be here. Let me pull up my slides and get right to it. It's a lot that we're going to be covering, but as Sue mentioned, it's meant to be interactive. These are always more fun when people have questions and we're able to address them in real time. We also will have some time at the end to answer questions if you're holding on to them. But without further ado, let me pull up the deck. So is everybody able to see my screen? Sue, everything look good? All right, perfect.
Looks good, buddy. Yep.
All right, thank you. So yeah, a little background. Sue mentioned where I come from. On the left are the most important things to me. My family. Started my career in insurance, left for a number of years, did non-insurance entrepreneurship stuff, and now I'm back doing wildfire-related work, which is great because I live in Northern California. And this isn't just a theoretical thing. Wildfires are real. We wake up on not an infrequent basis with ash on our car. So when I had the opportunity to join Clark and the team at Redzone, who have been around for 25 years dealing with wildfire, it was really a great opportunity. So I know that there's probably going to be a range of knowledge and expertise regarding wildfire. So I'm kind of going to try and cover all bases. Hopefully there's valuable information for everyone. Again, questions during the presentation and afterwards. If you'd like to connect one-on-one after the presentation, happy to do so. But we're going to cover things as Sue mentioned, why wildfires are important now. What are some of the underwriting and rating fundamentals? What are some tools that are out there that you could use? Some regulatory considerations. We're going to dive into concentration management kind of case study. And then again, questions at the end. So on the right here, you can see this is a live map of drought conditions. As we know, there have been recently fires in Florida and Georgia. There's severe drought in that area. But across the country, you could see these pockets of dark red. I know the Rockies got very little snow this year, so the snowpack is near historic lows, if not at historic lows. And there's oftentimes correlations between the snowpack and wildfires, an inverse correlation. So it is a very relevant topic, and we're entering wildfire season. So this is a little bit of a chart from 1983 to, I believe, 2024, the number of annual acres burned in the US. And you can see, while it's not a consistent trend upwards, there is definitely a trend. It's a 12% trend annually. So this is a risk that some would categorize as a secondary cat peril. I don't think that's the case anymore. It is becoming more and more of a concern. And there's volatility. I mean, there are years when it's 3-4 times the previous year's number of acres that are burned. So it's definitely top of mind, and we expect that trend line to continue moving up and to the right. And while most people think about wildfires in California, it is not just a California phenomenon, and it's not just a Western US phenomenon. It is now a national concern. The Southeast just talked about the fact that we had, I think there were 5,000 fires so far this year in Georgia alone. Florida had hundreds of thousands of acres burned recently. Texas is another state that kind of flies under the radar, but just earlier this week, they had extreme critical wildfire conditions because of the humidity and the winds that were involved. And the Midwest is an area where they've been seeing fires recently. There were fires in Kansas this year that I think they're burning over 100,000 acres. And there were fires in other states in the area as well. So again, what once was considered almost entirely California-based or entirely Western is now a national concern. So not only are they happening more frequently, and are they more intense than they were in the past, the cost to replace the damaged structures are going up substantially. So if you look at the construction costs from 2019 to 2025, the construction costs are up 45%. So even if things were level and you had this, just the same amount of frequency, the loss ratios are suffering as a result of this increasing cost for construction. Another factor that makes it relevant is the percent of the homes that are in the WUI. The WUI stands for the Wildland Urban Interface. This is where houses and communities are built next to wildfire exposed areas. And it's kind of shocking to see the numbers, but from the 1990s to present day, the percent of homes built in the WUI increased by 47%. Now, thankfully, the growth is slowing. While we are still seeing addition to the WUI, there's not the same kind of growth we saw from the 1990s to the 2010s, but it represents 32% of all housing in the US is in this wildland urban interface. And those are the properties that are most at risk in the event of a wildfire. This is kind of a perfect example. This was from 2013, I believe. This is a fire that happened in Southern California. And you can see this open land over here is where the fire breaks out. And there are these properties, this is the Scripps neighborhood, that were built right at the intersection of where the trees are. The tree line comes right up to the home. So there were, I forget the exact number, but I think it was about 2,400 homes that were lost in this fire alone. And part of it is due to changing environmental conditions, but part of it is due to where houses are being constructed. So this is particularly, I think, relevant for regional carriers because they don't have the advantage of having a distributed book of business that are arguably uncorrelated based on geography. I mean, they're highly concentrated in single areas, and there's significant volatility. If there's a large fire in an area with a regional carrier, it could really cause significant issues and disruption. So there are tools that we'll get into later that you could plan for. But again, I think because of the concentrated nature of regional carriers, wildfires is an even bigger consideration. So first consideration is the location of the structure that's being insured. So when you look at the location, you want to look at what are the fuels in the area, what are the plants, what are the wildlife, well, the plants, the trees. Some trees are obviously more wildfire prone than others. What's the slope? Fires tend to burn uphill. If there's a steep slope and there's a fire underneath, the embers and the heat and the smoke all rise and increase the chance of ignition uphill. What are the weather patterns in the area? So these are all the kind of macro things that an individual property owner aren't able to control, but that do affect the wildfire risk in the area. Second is the structure. So this is what is the structure made out of? What is the roofing materials? What are the sidings? Do they have vents? Are the vents ember resistant? These are things that are within a property that owner's control. Some of them are easier to address than others. Replacing a roof isn't necessarily the easiest thing, but putting a ember resistant vent on is something that is much easier to do. And then lastly are the mitigation efforts that are undertaken at the location. And so this, includes the defensible space around the property and the community level mitigation efforts that are happening. So one of the sad parts of wildfire prevention is, you're only as safe as the general area. So you could do everything you can. You should do, the easy stuff to protect your properties, but it also matters what your neighbors are doing in the community as a whole. So all these different aspects do have tools to measure them that we'll get into a little bit later.
If we have a question, they asked, what type of vent did you reference?
Just an ember resistant vent. So certain vents, have maybe a quarter of an inch grading or no grading at all, but you really want the fine mesh to make sure that the embers don't get into the vents. So any ember resistant vents are highly recommended. That's a relatively low cost way of protecting your home because, as we'll get to in a couple minutes, embers are really the primary cause of ignition for these fires. So anything you could do to protect your home from embers getting in is going to be hugely impactful. So defensible space, the Casualty Actuarial Society came out with a paper in 2022 analyzing various different factors, and they found that defensible space and roof type were two of the most impactful variables in the chance and the severity of loss on your property. And it's very much something that you could take action on. So with defensible space, there are 3 zones. Zone 0 is 0 to 5 feet from the home, and this is an area where there should be no combustibles. So that means no plants, no welcome mats that are made out of flammable materials, no deck furniture, no bark mulch, excuse me. Any of those things shouldn't be within 5 feet of the home. Then you have the zone 1, which is 5 to 30 feet. This is where you're allowed to have combustibles, but they should be properly spaced and properly maintained. And then you have the 30 to 100. Again, same. You could have more foliage again, but there are rules on how close they should be together. And ladder fuel is a perfect example of something you want to avoid. So what is ladder fuel? Ladder fuel is when you have a bunch of kind of fast burning materials that can then ignite things that are a little harder to ignite, that then ignite things like a bush, that then ignite low hanging branches, which then ignite a tree. And the tree could shed embers for potentially miles. So this is something that you definitely want to avoid, where a spark landing on the grass could easily ignite and then cause a tree to catch fire. Whereas the tree itself, if it were standing on its own and didn't have these fuels laddering up in kind of a domino effect, is unlikely to catch fire. So ember casts typically account for 60 to 90% of losses. So what happens during these events is you'll have potentially hurricane force winds that are blowing these embers for miles ahead of the fire front. And what happens is these embers get everywhere. They are just bombarding the home, and any opening, anything, anywhere they could get, any crack in the home, any vent, any exposed wood, it could even if your garage door isn't sealed properly, the vents could get in and potentially spark and cause a fire, because there are a lot of flammable materials inside the home. Another area where it commonly starts is that there'll be debris in the gutters, dried leaves, and an ember will land in the gutter, start a fire, which will then spread to the home. So most people think of a house burning down because a wave of fire is coming and the flames from the fire ignite the home, but that is not, in fact, the case. It's typically a tiny little ember that gets in and takes hold and then burns down the whole house. So a great example is of hardening was done by the IBHS in a video from 2023, where they built two faux structures. And on one structure, they had a wooden fence that went all the way to the house. And the other one, they had a wooden fence but had a metal gate between the wood and the structure. And they put fire in the middle, and they had these large industrial fans blowing on it. And you could see on the right that the house with the wood fence that went right to the side burnt down, and the house that had the metal gate between the wood and the structure was spared. So, these hardening efforts really do have a real world impact. And this was just kind of a controlled example of how they behave. So I'm going to go into a little bit of the tools that exist and analytics surrounding wildfire. So going to dive into a little bit of wildfire hazard scoring. So that's looking at the score of a single location and how that's affected by wildfire. We're going to look at self-inspection apps. We're going to look at concentration management, and then some monitoring tools. So for hazard scoring, again, hazard scoring is looking at the macro level. Those are the things that are beyond a property owner's control. And when you're choosing a hazard scoring tool, you want to make sure that it's transparent, so it's clear to the underwriters what's going to the model and what's coming out of the model, how to understand it. It should be clear to the regulators. It should be clear to your customers. And it also should be granular. I mean, it should be highly granular is important. So you want to make sure that, if two properties, even if they're on the same street, have different characteristics, that they're being scored differently. So on the right here is kind of a map of the Denver area, and you can see the transition from the open space on the left over here with the very high risk area moving into the community. As we get further into the community, it goes from very high to high, and then we get the lower, and then we get the areas that are minimal risk. So just because there's wildfire in the area doesn't mean that everything is at risk. So you want a highly granular tool. I mentioned that the structure vulnerability is another factor, and there are tools to monitor the structure vulnerability as well as the hazard at the location. So again, hazard scoring looks at the macro level. Structure vulnerability looks at the characteristics of the structure itself, and then you're able to look at where those two things intersect to get a refined view of risk. And so this is an example of what a hazard scoring tool could look like. It should be clear, it has a score, a numerical score. It could have, a classification of that score. And then the underwriting team would have the decision. They can make rules. Anything maybe under a 6, which is moderate or below, they're going to accept. Some that are more sophisticated may say, well, anything that's under a 6 we'll accept. Anything that's a 7 or 8, we'll look at the vulnerability and decide whether or not we want to accept it. So Again, it's important for it to be clear and transparent and actionable. Diving in a little bit deeper, so we have a partnership with a company that has a self-inspection app. Because as we mentioned, the ground truth is very important, but it's sometimes hard to collect that information. It's historically been prohibitively expensive to get that data that's necessary to make the decisions. So we're super excited to have this partnership with a self-inspection app. So a customer is able to download the app. They get instructions on how to collect the data, where to take pictures. It uses AI to see where there are plants, see where there's bark mulch, see where there may be trees overhanging the structure, which could potentially ignite the structure, and give feedback. And it's really meant to be an iterative process where you do a self-inspection, you get a score, you get a list of recommendations, and then you take action on those and take another survey, hopefully improve your score, get another list of actions. And it's really intended to be collaborative as well. I mean, the first thing isn't going to be to replace your roof, because that's unrealistic. The first things are going to be, replace the siding on your garage, because the embers could potentially get in. Thirdly, looking at concentration management. So again, mentioned before, mentioned again, for regional carriers, this is particularly important. We have a tool, and there are other tools in the industry to look at how concentrated you are in a certain area. And we're gonna dive a little more into detail there. But oftentimes we see that 2 to 5% of the locations account for 50% or more of the modeled losses. So it's a very small portion of the book that's driving the modeled losses. I love doing these graphs over here. When we do proof of concepts for companies, we'll take in their book of business, we'll model it, and this is a graph of the cumulative TIV versus the cumulative modeled average annual loss. And you can see it's very steep at the beginning, because you have those few policies that are really driving the losses, and then it kind of flattens out the further along the curve you go. So with some strategic, planning, you can make sure that this is more of an even curve, and you don't just have a handful of policies that could blow up the whole book. And lastly, I have a poll question, but I'll keep talking through it. Lastly, we have monitoring tools. So again, there are a number of companies in the industry that have this. We have one that's purpose-built for the insurance industry. And so we have a team of analysts that are monitoring wildfire perimeters 24/7. And we're able to ingest an insurance company's book of business and see the relationship between the wildfire perimeters and the policy location. So this is, each of these blue dots represents a policy location, and you get information on how large is the fire, how long has it been burning, how contained is it, etc. And then you get factors such as how far is it from your closest location, how many locations are at risk, what's the total insured value at risk, etc. So it's something to give you a very quick real-time view of what's happening. So you're able to adjust accordingly, and you could communicate easily with your policyholders to let them know the situation, send them customized emails on what they could potentially do to harden their structure as much as possible at the last minute. So it's very helpful in the time when things are really heating up, and you need a very quick, accurate view of what's happening. So I'm going to talk real quickly about coverage and regulatory considerations. So again, wildfire is one of those perils. It's often a total loss. If there's a large wildfire coming through, it's not always a total loss. There's smoke loss as well. There are costs for additional living expenses and debris removal. But if a structure goes up, it's often a total loss. So it's important to be conscious of the difference between the market value and the replacement value for the structures, because you want to make sure that if these structures are lost, they're not underinsured. Again, smoke damage is a big consideration. Again, removing debris from the properties after a fire happens, or removing the structure itself after a total loss could be quite substantial. So when it comes to scoring products, as I mentioned earlier, you want to make sure that there's transparency in the scoring product for all parties involved, for the internal underwriting team, for the customers, for the regulators, etc. You should be able to clearly express what the score is, where it came from, why it matters, etc. California is known for having the Safer from Wildfire Act, which requires wildfire credits for certain mitigation actions that have taken place. So this is kind of the structure vulnerability that we talked about. There should be a way for you to consider what has been done at the property to reduce the risk. There's some great standards by IBHS and from the what is it? Firewise Communities by the NFPA, I believe. They have a bunch of information on how you could reduce the wildfire risk at the location, and insurers really should be taking that into account when they're giving credits or when they're doing their rate making. And then lastly, there's an appeals process where the customers in a lot of states are able to ask what the score was, why they got the score they had, what they could do to change their score. So all that information has to be readily available to share. So as I mentioned, we're going to do a little bit of a dive into concentration management tool, and then talk a little bit about action plan, what you could do moving forward. So with concentration management, historically, if it's done at all, the most common method is to use blast radius. So if there's a new location, you look at where that location is, you draw a circle with a 5 or 10 mile radius around it, and you look to see what the total insured value is within that circle, and you make a go or no go decision. Other ways of doing concentration management is by zip code or by county, but we know fires don't burn in perfect circles, and they don't obey zip codes or county lines. They go where they want based on the weather. So, a perfect example of that is the Woolsey fire from 2018. It started up in this area over here. There were Santa Ana winds that pushed it south. It burned about 100 acres, caused $6 billion in property loss, but it burned through 12 zip codes, 2 counties, and 150 square miles. So if you were using any of these metrics to try and estimate the potential loss of this fire, you would have woefully underestimated the loss potential. So we have a tool. There are other tools in the industry, but we have one that looks at what we call correlated risk zones. So it uses a database of hundreds of millions of wildfire simulated fires, and then we break up the landscape based on where the natural and man-made fire breaks are. And so the community zone is roughly 50,000 acres. They're typically bound by roadways. Now, roadways are great man-made fire breaks because a fire will often come and burn to a road, and then there's no fuel. Now, are they impenetrable breaks? Absolutely not. But they do provide a break because there's no fuel during the road. And also, not only is there no fuel, but it's typically where response resources would line up to fight back the fire and ensure it doesn't spread and doesn't make that jump. The community zones roll up into complex zones, which are roughly 1 million acres. These correspond to some of the largest fires. These are typically bound by harder boundaries. So these would be bound by waterways or mountain ranges or fundamental shifts in the landscape. And then those roll up into regional, statewide, and nationwide numbers. And so this is kind of what the tool looks like. Again, similar to the monitoring tool in that each one of these blue dots represents a policy. And you're able to get concentration information. So this is a complex zone, again, roughly 1 million acres. We can see that there are 3,800 locations we have 4 billion in TIV, and you get modeled average annual loss and the PMLs at different recurrence intervals. But you're also able to see the policies on the map and see how they're distributed. You could click into each of these policies and get information on it, what the score is, what the average annual loss is. And you can see there are a fair number that are on the border, there are a fair number that are on the middle. You're able to get a sense of whether your policies are evenly distributed across the zone or all clustered on the border. And so this is a graph of the wildfire perimeter that we just looked at, the Woolsey perimeter, inside that complex zone. And you can see that it's fully encapsulated within the zone. And so if you're using a tool similar to this, you hopefully are not accumulating too much within the zone. You're able to, and if you have it accumulated beforehand, you could see what it is, you could know, and you could take action accordingly, either to stop writing in that area or potentially reduce some of your exposure in that area to make sure that you know what's possible in the event of one of these 1 in 250 fires. So the short-term plan of action is really to take a look at your book of business and use a tool. Again, there are lots of tools in the market. Redzone is one of them. There's Hazard Hub, there's CoreLogic, there's Zesty. There are a number of different tools, but get a handle on what the scoring is of your book and make sure that the properties that are in it are within your risk appetite. And also look at the concentration management, because that's kind of the second level. I mean, hazard scoring is table stakes, but even if all of the properties are within your risk appetite, you want to make sure that a single event isn't going to take out all of them. They may all be, moderate risks or less, but if they're all in the same correlated risk zone, then they could all perish. Now that's very different depending on the area you are. I always say that I live in the San Francisco Bay Area. Oakland is about 3 miles away from where I live, but it's across the bay. Now it's unlikely, not impossible, because again, embers could travel for miles, but it's unlikely that a fire that starts in the East Bay is going to cross over the bay or burn around the bay. Whereas we saw with the Woolsey fire, there are some places where you could be dozens of miles away and there's nothing but, tinder in between, and a fire that starts in one location is going to burn through. So again, making sure that each location is within your risk appetite is important, but making sure that they roll up in a way that isn't going to, cause you to lose your shirt in a single event is equally important. So once you do that analysis on your book first, then I think it's important to have rules on which policies you want to accept going forward. Again, really think about what your risk appetite is, coming up with plans, again, potentially looking at what the cutoff is to accept, whether you wanted to look into vulnerability, et cetera, and setting those caps for certain areas on how much loss you're willing to accept in a single area. And then in the longer term, really monitoring the locations, doing surveys at the locations, really getting a handle on the book, and making sure that people are taking mitigative actions to reduce the risk at the locations they are as much as possible. So that's largely it. Again, wildfire is a national risk right now. It's not just localized as it was in the past. Mitigative actions really do make a difference. You're able to reduce your loss by 50+% in some locations, depending on what the roof type is and how much defensible space. The Casualty Actuarial Society says up to 84% of a reduction. The parcel level data is super important, and how it aggregates up is important as well. So our goal is to provide companies with the tools that they need to really go from avoiding wildfire risk to making informed decisions about it based on data. And this is the contact information if you want to get in touch with me directly, if you have any questions, but would love questions at this point. So thank you so much for listening. And Sue, if you're able to lob any in.
Does NFPA play into all of this space?
How do they play in?
Yeah.
So they're a great organization, and they have the Firewise community program. So they they will certify a community if they're taking certain mitigative actions. So they'll go into a community will have to initiate the process. They'll give them kind of their criteria, and they have the availability to kind of take action on the NFPA's recommendations. And if they take the necessary actions, then the NFPA will give them the Firewise community certification. And the industry is in the early stages of using that community level information to change the scoring. Because again, it's not just the location, it's not just your location that matters. It's what happens in the whole community. And what we learned from certainly the LA fire, from the Lahaina fire, et cetera, is that oftentimes, a wildfire will turn into an urban conflagration, right? So there are areas, often the open space is where there's a lot of fuel, and that's where a fire will start. But as we talked about, the WUI, we have these high growth areas right next to the open space, and these wildfires will move into the community, and then they'll become an urban conflagration, which is different than a wildfire. It could be caused by a wildfire, but that's when the structures start to be the fuel instead of trees and shrubs being the fuel. And so that's a big consideration as well. So the point is that the community's effort to reduce wildfire risk in the area is super important, and one of the things that thankfully is getting more attention. And that's something that NFPA is very, very much on the front lines of.
An early slide showed annual acres burned peaking at about 10 million. For scale, how long might it take for that acreage to recover?
I apologize, but I'm not able to answer that question. Outside of my expertise.
Well, I just know to grow trees, those trees that are big like that take 30, 50, 75 years to grow.
Could be hundreds. Yeah, it really
it could be
depends on the
100 if
area.
you're talking about
and
redwoods.
Yeah. Some areas, maybe grasslands, and grasses could go back in 2-3 years. Some of them, the fires up in Santa Rosa, near where I live, in Tahoe, they were devastating fires, but there is still a lot of fuel there. So one of the things that we look at, again, I'm most familiar with our tools, so I'll talk about our tools. There are other tools that do other things. Our tools are built to be long-term focused. If there's an area that has a lot of grass that could burn quickly and grow back in a couple of years, you don't want to be, it's true that after a fire, there may be a reduced risk for a year or two, but we don't change the score based on that, because we don't want companies making a long-term decision to underwrite a property based on short-term information. Now, there are certain carriers, or there are certain providers that do look at that, because it's important, let's say, for builders risk, because they're only going to be writing the policy for 6 months to a year. And the fact that, there's a reduced risk is actually very relevant. The analogy that I use is long-term investing versus short-term investing, or day trading. You can make money either ways, but you got to know which one you are. So we try and look at the long-term view. Again, unless the area is fundamentally changed, unless there's no more fuel in the area, or let's say there's an area where it was wildland and then they cleared the whole area and made a shopping center and parking lots. That's an area where the scores would change. But otherwise, if there's just a temporary change, we're not gonna be making adjustments.
Are there proper vegetations that people can use, or businesses can use to protect their land, but also to make it look good? Like landscaping looks pleasant.
Absolutely. And that the NFPA and the IBHS have great resources on what plants are more wildfire friendly than others. Again, within the 5 feet, it's recommended that no vegetation should be there. But something like an aloe tree, it's filled with water, right? It's not very combustible. Whereas something with lots of leaves that are gonna fly off and dry out and potentially accumulate on the side of the house, those are ones that you definitely want to avoid. So they have great resources on how to deal with defensible space, plants that you could use, etc. How to hardscape to make it look nice, but still be protected.
So if a neighbor had a lot of dead wood and trees in their yard, as we've seen in California, that was the big complaint too, right? That there wasn't people weren't cleaning up properly, and the state wasn't doing anything. Can an insured do anything? Is there any recourse you have to?
Absolutely. Absolutely. I mean, I think that, I was talking about this. We were actually had a company retreat this week. I was talking with a coworker how, the town, I mean, I'll use myself as a case study. The town will come by to my house. I'll admit I try and keep my house fire safe, but sometimes, the grass in the backyard gets very long. There's a hillside, and they'll come and they'll recommend that we cut it. And sometimes, I'll get to it, and sometimes it may take a little longer than expected. But if my insurance company came and told me that my grass is too long and I need to cut it, I would have it done before they finish their sentence, because that has a real impact. So I mean, there are always carrots and sticks, and the environment is definitely changing. I mean, if there is wildfire risk in your area, the days of just shopping for the cheapest insurance policy are gone. Certainly in California. I mean, it's a collaborative effort, and I think it's for the best. And I think the insurance companies are really the ones that are driving the behavior change. And that's the way that I think everyone's going to win. I mean, the insurers will be paying out less losses, but people, will have more accessible insurance and lower premiums. So 100% it is within the control. Again, carrots and sticks, it depends how big the carrots and sticks are. For better or worse, sticks tend to work better than carrots, but it could be a combination of both.
Do vendors like Redzone assist insurers in communicating mitigation needs to insurance consumers?
So do we communicate them to consumers?
Or do you help insurers communicate the mitigation needs?
Yes. I mean, through the insurer. So we don't typically have direct access to the insurers, but we often get questions from our insurers because the policyholders are allowed to ask questions of the insurers, and then the insurers relay them to us. Why was my property rated this way? What could we do differently? Again, unfortunately, for hazard scoring, there's nothing you can do because those are the macro factors, and it's only the structure vulnerability aspects that they could take action on, and not everyone is taking that into account or as much as possible. But yeah, we do try and communicate as much as possible, and there are some companies that are certainly more proactive than others.
Do some states offer tax breaks for mitigation, wildfire mitigation, either at the insurer or consumer level?
So not tax breaks, but premium breaks. So California, passed legislation that required insurers to give breaks for a number of different characteristics. So what the construction type is, the roof type, how much defensible space, double pane windows, vents. So the analysis that I mentioned earlier that the Casualty Actuarial Society produced, they think that some of those factors are more influential than others, but in the state of California, you are required to give discounts for all of those actions. Now, one thing that my boss often talks about is the fact that it is a matter of the weakest link, right? So every action that you take can be beneficial, but you're only as protected as your weakest link. And so it really is a matter of, what are all the activities that you're taking? And the more activities you could take, the more you're able to really harden the structure and prevent against a loss.
Are you seeing builders respond to the wildfire risk in new construction and are insureds demanding it?
I mean, that is something that I think that the government, the local governments and the state governments are changing regulations so that new construction does have to take new form. But absolutely, I mean, I think it's happening because there are certain, I mean, we've heard of developments that have gone up, these 10, $100 million communities. They finish the construction and then they find out that they can't get insurance. And it is, it just absolutely tanks the value. So you only make that mistake once. So it's definitely a consideration. It's something that's changing on the government level, but also, I mean, just because of the economics of the situation, the builders are taking that into account as well.
So are the Ember vents guaranteed to work? Are there any things aside from the vents and metal gates that can be used on the building to help mitigate fires?
Yes. Again, I will refer you to the NFPA and the IBHS. They have great resources on them. I mean, are they guaranteed? I mean, I don't know if anything's necessarily guaranteed. I mean, they're good. Again, if it's a very small grading, the idea is that an ember is unlikely to penetrate a vent. I know there are some vents that if they get to a certain heat, they'll actually melt. I think there's a special kind of paint so that it'll melt and it'll close the vent entirely. So there's a lot of things. I mean, I know there are covers. One of the things is covers on your gutters, again, because leaves and pine needles and other flammables will accumulate in the gutters, and then all it takes is an ember to land, and it'll start in the gutter and then get into the house. And so, yeah, there are a number of different things that can be done. But keeping defensible space, keeping the roof clean, those are some of the easy wins.
Is there a preferred roof for fire
Yeah, I
avoidance?
mean, so it's not wood. I mean, wood is the worst. I mean, asphalt is probably one of the most common. Asphalt shingles is most common. Metal roofs are some of the most fire protective. I think they tend to be a bit more expensive. I know ceramic roofs are highly fire resistant. So I mean, wooden roofs are bad from a wildfire perspective. It's sad to, go to Tahoe and see some of these beautiful houses, some of these lakefront houses with wooden tiles and just pine needles all over them. And I look at it and I think, man, you better you better hope for good weather.
So it is worth it then to get the leaf filter covers in this instance, than to
Yeah,
keep the.
absolutely.
Do we have any other questions?
That was great. We had a lot of questions, Seth. Good. Um,
Great. Well, thank you so much. Again, if questions come out, please feel free to contact me directly. It's been a pleasure.
well, Sue, I'll jump in. Seth, I've known Seth for a little bit of time, and he's always great when he speaks. And I always love hearing what he has to say about wildfires. And then I want to go out and yell at my neighbors to get rid of their wood. But I think this was excellent, really, and timely. And you said it right in the beginning. It is no longer California and Washington State, not even just the West. It's all across. And I know when we were talking earlier, and maybe you could address that, the challenge for the fire departments in regard to their ability to handle something like this, unlike, say, California, which you would assume is much more prepared. So maybe you could speak to that a little bit.
Yeah, well, so we at Redzone have a response department, right? So we do private firefighting response, and some people say, well, isn't that like, I don't know, isn't that what the fire department does? Isn't that, kind of unfair that those could pay for it? So it's the insurance companies that are paying for it, and they provide it as a free service to their policyholders. And the reason is that in the event of these large wildfires, even in California where it's more common, the fire department's job isn't to save the homes. I mean, the fire department's job is to save the people. I mean, it's all about, evacuation and stopping the larger fire, right? So if it means sacrificing a single home, that's not their objective. Whereas we're purpose built to fill that gap. And again, it's at no cost to the insurer themselves. It's the insurance company, because the insurance company obviously has the most financial incentive to do it. So, but absolutely, I mean, in other areas where, the fire department is really there for a cooking fire, I don't, somebody's deep frying a turkey and they burn down their house. It's meant to fight a single home, not the whole community at once. And so it's just kind of it's a different tool for a different purpose. It's just not really what they're built to do.
Yeah. Well, I want to say thank you for everything. This was excellent. We had a very good crowd, and it's really on top of mind for insureds, but clearly the carriers who are having to deal with it. And prevention is one of the best ways. And then after that, mitigation and et cetera. So
Exactly. Yeah.
yeah.
I mean, mitigation is something that everyone could do and prevent. I mean, honestly, Jen, there was one event that I went to, and there was a senior, I think Cal Fire guy that was talking, and he said, suppression is great, but you can only suppress so much, right? Because the fuels will build and build and build, and then that's the problem, is when they ignite.
Yeah.
I mean, that's actually not a great thing. You want to have burns every so often to avoid those unstoppable burns. So,
Yeah.
and the things that you could do you can't do anything about what the Forestry Service does, in the forest, but you can not put bark mulch in front of your house that goes right up to your front door. So the mitigative
Right.
actions definitely make a difference.
Yep. Sue, you want to take over?
Okay, well, thank you again, Seth. It was excellent. Appreciate you taking the time to do that, and thank you to everybody who has showed up today to participate. As a 501c6 corporation, part of MSO's mission is to give back to the industry, and we're pleased to offer at least 10 CE credits this year, including the 3-hour ethics course that everybody had to have. We welcome suggestions for presenters and topics for our webinars. If you missed any previous webinars, they're available for on-demand viewing on our website, msonet.com. They will also be available on our YouTube channel at the Mutual Service Office. Please subscribe to the channel. It's free. Cassidy has listed the website, YouTube, and LinkedIn addresses in the chat today. You may have seen our training flyer. We offer CE and non-CE training for member companies, agents, and other industry members. In our 2026, our goal is to be licensed as a school in 50 states plus DC. I think we're at 41 now. And contact us for more information or a fee schedule. Our upcoming schedule, the link to the registration info is also on our website, msonet.com/event/MSO-webinars. Let us know if you'd like to be included on our mailing list. Our next webinar will be October 14th on artificial intelligence and insurance, what insurers need to know. It's a 1-hour CE presented by Elizabeth Reddersdorf and Ashley Picker from Day Pitney Law Firm. And I will finish the year on November 17th with the 3 CEs on emerging issues. Information is on all programs, as I said before, is available on our website, msonet.com. We also have over 200 articles that are available for your use for your clients or your employees. Once again, we'd like to thank our sponsors. Thank you everyone for attending. Special thanks to our team, and Cassidy especially, who makes this all possible, and the people in the background who do the filings and create the certificates and help with the continuing education, because it's quite a job. Please complete the survey and course evaluation that will be sent to you. And if you have any questions or issues, please reach out. Dan, anything for a final?
Thank everyone, and Seth. Great. It was very good. Very, very good.
Thank you.
Great rest of the week. Stay
Thanks.
cool.